You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody. That rockin' bit of tunage means it is time to rock out yet again with the Option Block, your favorite bi-weekly source for all things options related. We talk some strategy, we talk some what's trading, we talk a little bit of unusual activity, answer a bunch of your questions, whole bunch of fun stuff, mix it all together. You got the old OB. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting The Options Insider Radio Network, coming at you live at noon Central, 1 p.m. Eastern here for the Thursday edition of the old OB. And joining me on the old All-Star panel today, let's go around the horn. Let's go back out to a land where there's been some action of late. There's been some announcements of new prequels and things in his land of Westeros. So once again, appropriately enough, we are joined by the Song of Ice and Fire himself, Mr. Colin Songer, holding down the Fidelity Trader, active trader, I should say, hot seat, which in my mind, Colin, looks a lot like the Iron Throne. Is that how you envision it as well?
Yeah, and why not? If I'm going to go, I might as well go all the way in. Absolutely.
Go big or go home. So you're sitting on a very uncomfortable metal chair full of spikes that was shaped out of swords right now as we speak, sir.
That's correct.
Somehow I find that image suitable. All right, then let's roll on out to the sleepy hinterlands of Maine. I don't know if he's got a sweet Iron Throne. I don't even know if he knows what the heck we're talking about, because I'm not sure if pop culture reaches that far. He is the Rock Lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com by way of Carmen Line Capital. Mr. G, welcome back to the program. Do you have a sweet Iron Throne to sit on during the show as well, sir?
There's all kinds of connotations on the sweet Iron Throne, which I can't quite wrap my head around right now. So, and yes, pop culture does not come into the driveway. We have a bubble around, so there's actually a no pop culture bubble around the Bevenberg that is Maine.
Nothing, just LL Bean and a little crab, or I should say clam thievery every now and then, and that's really about it. And last but not least, I don't know what kind of chair he sits on. I guess we'll find out. He is Uncle Mike TOSAW, from St. Charles Wealth Management. Uncle Mike, welcome back to the program to you as well.
And ironically, I'm actually standing right now. I like to stand when I talk. I believe in the expression, stand up to be seen, speak loud to be heard. Thus, I am standing.
There you go. I actually do the same. I always joke about the big chair, and I think an iron throne would be sweet. Unfortunately, I also stand up. Too many bells and whistles and buttons to hit and many cats to herd during show for me to sit down and relax. So I have to stand, and we have to keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
Standing desks. I don't need no stinking standing desks. I'm always standing here doing shows. Keeps the blood flowing. It's good. It's healthy for you. Let's see what's good for us today in the market. It looks like a lot is good if you're out there on the bullish side of the ledger this week. This trade war optimism, call it what you will, looks like there is perhaps a deal in place to roll back some of these tariffs. You hear these things and you always take them with a grain of salt, but it does seem like that is the case, and that is giving the markets a nice lift today. Pretty much everything firmly in the green with the exception of gold. We'll get to that in a bit. And that's pretty much as you would expect. We've got the S&P, actually the laggard today, up a mere 0.6%. We got the NASDAQ up about 0.2%. And actually Dow, old school, old economy, leading the charge to the upside today. Up nearly 0.9%, up nearly a full percentage point today. So good lift out there. Gold off nearly 2%. And actually crude getting another lift up there, up about 2.5%. WTI threatening that 58 handle to the upside. We'll get to that in a little bit on TWIFO later today, listeners. Spoiler alert, energy, lighten it up this week. If you've been listening to that show for a while, you know global demand, or perhaps the lack thereof, has been the crux of the issue plaguing that product. So perhaps this is the moment where the worm shall turn. We shall see. Where the worm is not turning, of course, is out in the vol space. VIX cash off yet again, off about another half a handle or so. Was down about 1240, now it's about 1260 or so. That puts it off a little bit less than half a point from our last show. Our old friend VVIX, VIX has been moving, so VVIX is remaining frothy, actually getting a little bit of a lift from last show, up to about 89 from 88 where it was on our last show. And our old friend VXX roughly unched right around that 19 handle here this week. Let's go back the way we came. Let's start in the land of standing. Not just me, but Uncle Mike. Uncle Mike, sir, you're excited. You're standing up. Things are popping off over there in the world of Uncle Mike. What is lighting up your tape today, sir?
Well, now I have to actually stand up again. I was just standing when you said that. Now I'll stand up again.
Now you got to stand for the whole show, just like me.
Here. Just like you. Got it. I think the main thing, of course, the trade deal is the main news that we're seeing right now in this marketplace. It's been on, we've talked about trade deals for, a long time right now on this show. And it's still the big news. And I think that the debate right now between the bulls and the bears will be once the trade deal is actually signed. And I think it will be signed. I think it's going to be a deal that CNN is going to say it's a terrible deal. The president gave in. He was played by the Chinese. And, of course, Fox News is going to say it was a great deal. Things went really well for him, and Trump's winning. So whatever that is, I'll let the political sides of everybody decide what that actually means. But what I'm seeing right now in this marketplace, we're firmly above the 3,000 mark at this stage. We're approaching the 3,100 mark on the SPX, the 310 mark we're approaching it. We're not there yet on SPY. And so the 3,000 magnet appears to be broken, at least for the time being. Now, what I would look at 3,000 as would be more of a level of pretty strong support should we get down to there. And the other thing of note, financials are doing really well today. They're up over 1%. I'm referring to XLF. It's up 34 cents on the day. It's cracked the 30 mark, but hasn't stayed above it, but has been above it. It's a couple pennies below right now as I'm watching the real-time quotes. So that's another thing that's good news for the market. Apple is Apple, where we hit the 260 mark on Apple. So a lot of things are happening right now with that's going on in the marketplace in terms of things that are making new highs. In terms of the metals, silver is getting a whooping today, down over 3% on the day, referring to SLV. So apparently a lot of the fear of the trade deal might not be there, at least in the silver space. And, of course, last but not least, I don't want to disappoint my fans, so never before in the history of the entire stock market has there ever been a better time to sell than right now. We are at new all-time highs in the S&P. Doesn't mean that there is not going to be a better time to sell tomorrow, but just going by history, today's the day, folks.
Today is the day. Indeed. Let's go on out to that Iron Throne and see. Let's see what this day is bringing over there in the land of fidelity. You know, Mr. Song of Ice and Fire, this is the day, I guess, a lot of people have been hoping for. We've seen these faux almost 1% rallies many times before on rumors of deals out here. This one seems to have a little bit more weight behind it, but still, given all this optimism on the street, what are the folks at Fidelity? What are they slinging today, sir?
Yeah, so taking a look, majority of them being earnings related. So top on the list today was Roku. They're right now trading at 125.70, which is they're down about 15.40, which is just under 11% down today. So it did open up near the bottom of that Bollinger Band. The day low actually did pierce through it, but it's pulled back inside. It is below its 20 and 50-day moving average, but it's holding above that 200-day moving average. When I take a look at the call-to-put ratio that it has, today it's 1.44 call paper to 1 put, where its 90-day average is sitting about 1.25 call paper to 1 put. Next, in the number 2 spot, which I know everyone's heard of this, so I'm going to throw it out here, BioNano Incorporated. It's right now trading at 105. It's up 14 cents, which is 15% up. This is based on Novagene adopts their Sapphire system. So the price actually did pop above the 20 and the 50-day moving averages, but it's still below the 200-day moving average. But since it's open, it's sold off and pushed right back down to pretty close to that 20-day moving average. So it's lost momentum since its opening. And this one doesn't trade options for it, so we won't be diving into that piece of it. In the number 3 area, Qualcomm. Earnings related, it's trading at 91.15. It's up $6.50, so about 7.75% up. Right now, when you look at it, Fidelity customers have 48% buy orders in compared to 52% of those being sell orders. Once again, earnings related. Now, this one did move above all its moving averages. It's been above them for about a month now, and it also broke out above the upper Bollinger Band, so that's really interesting to see. Now, the volume call to put ratio is sitting at 2.68 call paper to 1 put paper. When I look at the 90-day average, I was surprised to see that's pretty much in line, which is 2.59 call to 1 put. Next, once again, in that number 4 spot, batting cleanup, Square Incorporated. So Square released its earnings as well. Fidelity customers have 46% of its orders are buys, 54% are sells. Right now it's trading $64.76, up $3.43, which is about 5.5% up. It's above its 50-day moving average. It's above its 20-day moving average, but it's still below that 200-day moving average. It did try to push through the upper Bollinger Band, but has pulled back underneath it. It's right on that upper Bollinger Band now, so it'll be interesting to see how that plays out. The call-to-put ratio is 1.92 call to 1 put, compared to its 90-day average of 1.5 call to 1 put. And in the last spot is Tesla. So Tesla is about 49% orders placed by Fidelity customers are buys. It's right now trading $338.81, which is up $12.23, which is 3.75% up on the day. And this is on the back of the S&P overnight raising their outlook from negative to positive. Price has pushed, has been above its moving averages. The call-to-put ratio has flip-flopped. So today it's 1.54 call paper to 1 put, compared to its 90-day average, which is 1 call to 1 spot one put paper traded. So thought it was pretty interesting to see that flip on that. But so far today, that's what our Fidelity customers have been trading.
Thank you for that, Mr. Song of Ice and Fire. You may now go back to reading your prequels there, Fire and Blood, as we keep on rolling. Interesting one, by the way. I checked it out. It's kind of interesting. And, of course, he has no idea what I'm talking about. He's a pop culture Luddite. As he said, he lives in that bubble of nothing but clam thievery and LL Bean. Mr. Rock Lobster, sir. Inside that bubble, what is garnering your attention today, sir?
Obviously, and I'm not going to steal TOSAW's thunder, but we are trading at an all-time high, absent of a signed deal. So, once again, we are at this pretty, again, not once again, but we're trading at an all-time high. Like I think we did this in the spring. At the time, it was over 3,000 or whatever, and everybody was pretty happy. And then we had sadness, right? Up, down, up, down, up, down, up, down, sadness, sadness, sadness. And right now, what I would say is the thing I think that's really odd is this is the highest level the VIX futures have been relative to VIX cash for the year with this part in the cycle. So if you're interested in trading VIX futures and stuff like that, or trading volatility, which I am, you get very in tune to how the market prices time. And normally what happens is as you get closer to expiration, that time premium in the VIX future will compress. At this point of the cycle, we're a little less than 2 weeks in. I expect like $1 to $1.50 tops. Mostly closer to the dollar side. VIX is 13 or something like that. It's just, with 2 weeks to go, it's like how much does people really want to pay up for the future? Right now, they still want to pay $2 over the cash, which I'm trying to remember the last time it was that high. If the Thompson brothers are seeing this, they probably could chime in somehow, or maybe the Flowmaster has that data, or Dr. VIX has the data. But this is a pretty huge premium. I am positioned around this premium level because I don't think it's going to stay here. But if it goes away, either VIX really plummets. I think this is indicative of VIX actually plummeting, even though it's already pretty low, or we have no trade deal and everybody is just bloody miserable again. And then who knows how far the market reacts. So it's a real odd thing. And I think there was the second part is there's a lot of short interest, I guess, in the vol futures, and there are no natural sellers anymore. So if you have a lot of short interest, sometimes I know it might be, it might not make total sense, but there's a lot of short interest. There's a lot of shorts already, and people that are short want to buy it back. So at least for right now, there's a lot of buyers of VIX futures and not a lot of sellers. And I think that's another reason why we could have why the future premium is so relatively high. But super high for the cycle. I would expect the futures to be in the mid-13s by this point because that's historically kind of what they do. So, and they're not. So anytime something is not how you think, I want to know why. Why is it like that? And at least for right now, I'm thinking, holy gosh, why isn't it like that? And we're going to wait to see. So I think we'll either see a very low VIX number and a huge relief from the market, at least for some short-term period, or there's going to be a lot of sadness again. And I think that's what the futures are reflecting right now.
Lots of sadness across the board. Let's see if there's sadness in the volume side of the market. Everything's up today. We have seen this movie before, so let's see if the market's kind of shrugging this one off or not. Seems like, actually, no, it seems like decent paper hitting the tape today. Let's start in VIX land. Mr. Rock Lobster was just talking VIX and all the nuances therein of the VIX futures. I've said many times, the answers to all of your market questions lie somewhere in that VIX futures curve. You have to just pluck them out. And it's not always the easiest task. But VIX options doing a decent clip today, closing in on 250,000 contracts here in the early portion of the show. The ADV, again, right around 400,000 out there. SPY closing in on 2 million contracts. The ADV about 2.8 million. So a decent, hearty day's worth of volume ahead of us there in SPY-land. SPX, something similar. They're at about 700,000 right now, and the ADV is about 1.2 million, so north of half of their ADV as well. The Q's doing about 470,000. The ADV is 670,000, so closing in there as well. And the Russell, at least in IWM form, it's like right about half its ADV, about 171,000, and the ADV is about 340 out there. Let's go on to the top 10 most active out here. Cost you $1.60, or $1.59 actually, to break into the top 10 today, which is decent. We've had days when that's much less, so decent paper today. Qualcomm is number 10 with 159,000. Number 9, AMD with 173,000. Number 8 is Square with, what do we got? 179,000 over there. Square lighting it up today. Interesting. Number 5 hitting the 65 handle today out there in Square, up nearly 6%. So a good day for Square. Number 7, Bank of America, 187,000. Number 6, Teva, 206,000. I do believe we'll be coming back to them. Stay tuned. Number 5, good old GE, 220 on the tape out there. Number 4, Baba, 229. Number 3, Roku, our old pal Roku. Who'd have thunk that set-top streaming boxes would be the hot segment, the hot category out there. 377,000. If you listen to OPR this week, you know Brian's got some interesting new trades going on out there in Roku land. Number 2, Apple, 391,000. Apple, that means Apple's not in the top spot today. What could it be? It's our old friends Tesla out there, listeners. Tesla lighting it up today to the tune of 420,000. The stock's up a whopping 13 handles at about a 340 out there right now. So up about 4% out there in Tesla. I guess like some Chinese factory news out here. I'm not sure what's driving this news here and this big move in Tesla out here. But Tesla lighting it up again today. Of course, as the Song of Ice and Fire alluded to earlier, we still are in the teeth of earnings season. Had some big names popping off earlier this week. Uber, Shake Shack, Marriott, Groupon. On Tuesday, there was Chesapeake and Weight Watchers, Match.com for those of you in that part of the space. Wednesday was CVS, good old Roku, the aforementioned Roku, and Qualcomm, Fitbit, which is a weird one now because they're about to be acquired by Google. Thursday, so today, after the bell, we've got Activision Blizzard. That used to be an interesting one. Disney after the bell today as well, and Duke Energy tomorrow. Let's look at a few of these. Let's see. Roku, going into their announcement, they were pricing in, their stock was at about 146 and a half. They were pricing in 18 bucks, 18 even pretty much. So pretty rich straddle, but actually when you look at what they've delivered in the past, actually pretty light, roughly 50% light. They priced in 35 and change, so almost 36 bucks, and this time they're pricing in a mere 18. So that straddle seemed kind of light. Let's look here. Oh, and just in the early blush, Roku is living up to that straddle at least. They're off about 16 handles right now, trading 125, puts it down about 11%. Let's see, how low did they get? Let's see, they closed at 141, and they opened, down to 118. Wow, so yeah, they dropped down about 23 bucks. So yeah, they did that straddle and then some out here, and then they since have rallied a little bit intraday, got back up to 126, and now they're about 125 and change. So they got some of that back. Not quite 35 bucks, but a good clip there out there in Roku. Let's see. Also, we got popping off after the bell later today, Disney. Let's see what they're pricing in. At the time of this report, by the way, all these reports available for free. That's how much we like you guys. For free, theoptionsinsider.com. Click on that Options News and Articles tab, top right corner of the homepage to begin your journey there. These are earnings move and earnings move results reports, courtesy of our friends over there at ORATS, O-R-A-T-S. Check them out. You get a chance. And let's see, Disney. They got Disney here as well. It's popping off after the bell today. At the time of this report, they were trading $132.75. They were pricing in not quite $4, $3.70. And that is actually a little rich compared to previous moves. In the past, they've moved about an average of $2.75 or so. So about $1 rich compared to previous announcement, which is kind of interesting. Everyone's watching. Of course, Disney, all eyes on that Disney Plus coming out soon, I believe, maybe even this week. So a lot of interesting stuff popping off in earnings land, and that was just a couple of tickers, listeners. There are literally hundreds here for you to sink your teeth into pre- and post-earnings alike. As we keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that funky bit of tunage means it's time for the funky portion of the show. Yep, it's time to get weird with the Odd Block. Mr. Rock Lobster, we actually got some decent things coming across the Eye of Sauron today, so I will leave it up to you where you want to start. Should we go in order of biggest to smallest or smallest to biggest, sir?
I think we should start with smallest and then go to biggest to let the suspense build for the listeners.
And I was thinking that too, but I wanted to give you a chance to weigh in here. So yeah, we'll build, we'll tease the listeners. We're starting small, and even still, that's not very small on our first or any of these prints really today. Pretty active day out here. The Eye of Sauron's just spitting stuff at us left, right, and center. Let's start to the name we haven't talked about in a little while. This is our old friend Kohl's. They, of course, are that retail department store. Ticker symbol KISS, KSS. Interesting. Trading today, 57.05, up about 266, so up nearly 5%. So a good day for Kohl's out here. Let's look at the past year, see if it's been good. And no, just the first blush of this chart, the answer is no. A year ago, they were trading about 81, so well north of where they are right now at about a 57. They just ticked over 57. And let's see, and they promptly sold off by the end of the year. Actually, not even by that. The great nadir of Christmas Eve down to about close to where they are right now, about 59.5. Then they rallied back up in the beginning of the year up to nearly 70 again. By first week of January, they were trading 70 again. So they had a nice little pop. Then they kind of vacillated in that mid-60s to low 70s range until it looks like about April, late April, early May, and that mid-May actually. And then they about early May, they started selling off, got down to 67. And then by late May, they were trading 55 again. So it seems like earnings did not shine favorably on them. And then by mid-June, they were down to 46. So they had pretty much been cut, not quite in half, but pretty close to it. And then they kind of vacillated, rallied a little bit again in July, back up to about 54. Then they sold off again down to about 45, where they've kind of been bouncing in that range, up and down, up to 49, back down to 44. Then they've been slowly drifting ever since October. They hit about 46. They've been drifting back up to the upside where they are right now, 57.01. So an interesting year. Not quite the best year, but recently it's been looking a little better for Kohl's. Let's see what we saw today. What did our Eye of Sauron deliver to us? And this is what the smallest print we got today. So some big prints going up today. We found 10,750 of the KSS. I like that. Jan 60 puts going up for $6.75. So all sorts of interesting with these. Right off the bat, 60 put strike. These are $3 in the money already. So these are meaty. And went for $6.75. The market, as you might expect, was a wee bit wide. $6.10 at $7. The guy paid $6.75. These were opening, so clearly new positioning here. There are earnings, but not before this name. Actually, the earnings are in are in the 19th. So they're coming up in about a week and change. So this Jan goes well beyond that. So you'd think with today's move, maybe there was some earnings afoot, but nope. Just I guess trade war optimism lifting this name pretty strong, up nearly 5% today. So, Mr. Rock Lobster, let's start here. Pretty sizable, looks like put love. Interesting strike selection. I haven't pulled up the chain here, so I don't know. Maybe this is a dearth of strikes issue. Probably not a lot of strikes in KISS, and maybe they didn't want to go down to 55, so they stayed at a meaty 60. But either way, nearly a $7 put, opening nearly 11,000 times here in Kohl's. So a lot to unpack here. The time frame, the meatiness of the strike. What's your spidey sense telling you here, sir?
That is a pretty darn big strike. Oh my gosh. I'm actually kind of I am shocked and I'm thinking, why do you do that into this huge rally that we're having? And I think my first question is there is something kind of feels amiss with this trade right now. So I'm actually I'm looking at it, and I really don't have I don't have an answer to it. I mean, I'm trying to. I'm actually tongue tied on this one. I don't really. I don't have like an opinion one way or another on it. I'm a little flummoxed, to be honest.
Well, I took advantage of your flummoxing to look here at pull up the options chain, and it looks like my initial supposition was incorrect. There are actually a decent number of strikes out. So I was being charitable, this guy, and saying he had no choice. He had to go to the 60s or maybe to the doubles, but he could have done 57 halves if he wanted. There's actually a decent number of strikes out here he could have chosen from. So it wasn't like his hand was forced, Mr. Rock Lobster. He went to the 60s because he wanted that strike. Yeah,
I mean, I'm looking at it. There is not a lot of premium over parity in it. So. The only thing I can think of is, are they doing a little protective put action in here? There's some earnings coming out. It is just a big chunk, and it does feel like it's a little more than the OI. So we have opening paper. So a weird. There is quite a bit of, if you look at it, could they be rolling? Could they be rolling up from the 55 to the 60s on this? So because there's just more paper coming in. So I'm trying to look at this. Maybe somebody was long that 55 put. I can't see that they were long it. The market's up, and then they're rolling it and then buying another more expensive put. Again, it's a little weird to me how it's going on, because it looks like they're buying 60s, and they might have closed the 55. So
usually if you're doing it the other way, though, right? I see that now. You're right. 7,000 of the double puts went up as well. So they're doing it on a ratio. They're buying more of the meteor put, which is usually not the way you do it if it's going against you, which this appears, if they're closing it, they're selling those out and buying a meteor strike. Usually it's the other way if you're losing money on that trade.
Yeah, it's almost like that's why I'm confused. It's almost like they're putting more money, more premium, more contracts into a position that hasn't really worked.
Yes. I hated it before at the doubles, so now I got to do a lot more at the 60s, because that
so
always
I guess
works.
I got to hate it a lot more at this level. I don't know if that would be out of the TOSAW playbook. Because even if they're long stock in this, right? I mean, if you think about it, I don't know where they could have put on to make money even, to be long it, because we're at a level now that's 1 year, like at least 3 month highs. So it almost feels like this is kind of this is what I would call it it's a hate trade. It's a spite trade. Where I got screwed. I'm wrong, but I'm going to close it, and I know I'm going to be right eventually, and I'm going to throw more money at it and be twice as spiteful as I was. Now I'm in there for the spite. I'm going all in. I'm totally wrong, but screw it. I don't think I'm going to be wrong, and I'm going to make money eventually. It's like going to a blackjack table.
That's a sure way to prosperity.
Yeah. Yes, I was waiting for TOSAW. It's like, okay, so I apologize to the listeners because I was just confused on this, but now that I feel it's a spite trade, it makes total sense.
I like it. And whenever it's weird like that, listeners, you know what we have to do then. We got to put it in our to-be-watched category. So we shall return to our friend, he who is so spiteful right now in these calls, because you're right. Usually we see the ratios going the other way. When it's a house money roll, they have some money to burn. Obviously, this guy's probably got some stock, so maybe he's thinking that way, hey, I got money on the stock today. Let's put it to work buying more options. So that could be the way it is, but still. A weird one. We're going to put that in to be watched as we keep on rolling into our next name. This is one that's a frequent offender on the show here. This is Teva, not those funky sandals. No, Teva Pharmaceuticals. Let's see here. Ticker symbol Teva, T-E-V-A, an appropriate ticker. You know, if you listen to the show long enough, you know I'm a fan of those. Trading today about $8.50, up nearly $0.50, so nearly 6%. So a good day out here in Teva land as well. Wow, a rising tide lifts all boats apparently today. Let's look back at the year that's been in Teva. So let's see. Today it's about 8.5. A year ago, it was nearly 3x that. It was closing in on $24, and then it promptly sold off. By the time of Christmas Eve, it got down to 15. So that was a pretty big hit for Teva. And then it almost immediately rallied back up to about 20 by the end of January. So a nice V-shaped pattern there. Then it kind of began from there, another long, slow, lingering sell-off. By March, it was trading about $16. And then by May, it was trading $8.65. So pretty much right where we are right now. Then it's kind of been vacillating in this range. Got down to a low of $6, actually, $6.07. So did get a bit lower. Then it kind of bounced off that. That was back in August, looks like. And it's kind of been vacillating around this range ever since. So an interesting one, a cheapie. Let's see what. Oh, this is not what I expected. Usually a cheap name like this, you see some size call love. It actually looks like it might be the opposite. We got some size put love here in Teva, trying to protect what's left of that $8, I guess. 18,000. So big prints going up today. 18,000 of the Teva March 10 puts. Once again, Mr. Rock Lobster, meaty puts going up for $2.18. These were a little tighter than the Kiss puts. These were $1.94 at $2.18. They went up, you guessed it, for $2.18. This guy wasn't playing around. He took all of them. He said, give me that offer. I'm taking 18,000 there, which is a pretty decent clip here. And this, once again, was on the box floor. So box floor, putting up some prints 2 shows in a row. I think we've had some box floor prints going on. So I'll have to tip my hat to Ed Boyle and the team over there, putting up some prints. They are earnings today before the bell, so clearly that's the lift we're seeing right now. There's the Teva earnings today. So, Mr. Rock Lobster, these are post-earnings puts. Someone's coming in once again doing size, once again doing a pretty meaty strike, and once again going a little bit far out there. So I'm seeing a little bit of a repeat from our last trade. What do you think here on these meaty March puts for size in Teva Pharmaceuticals?
Yeah, again, another one. They reported decent earnings. This is a company that they got a lot of debt, and they could have, then they have, I guess, an unfunded liability with the opioid crisis. I guess everybody's suing the drug makers now. So as far as this goes, what do we have or what do we make of it? There's also 37,000 of the 9 puts going up. So on a day when the vol's coming down everywhere, they're buying the 10 and 9 puts like they're going out of style. And I don't have an answer again for these. Even if they bought the stock at recent lows, they had the recent lows like $16.50, or I'm sorry, $6.50, somewhere around there. You're buying these puts maybe because you think things are going to go bad for them, and the stock goes to $5. So it's another head scratcher on how much you can make on buying these puts. The stock would have to basically go to zero, which anything's possible, but it would have to do that by March. So it would have to go way below the alternative. So, or they're just hedging massive stock positions. That's the only thing I could think of at this point. Now, actually, it's printing 40,000. So, are they spreading these things? But as far as I can tell, they're just buy, buying a lot of near the money puts or in the money puts. The 10 puts now looks like okay. Well, you know what? Again, very odd. So I'm seeing different currents with all of this. So 218 and 1040. I'm just looking at it. I think that just the way the paper is now, everything's sort of shifting. That initially they sold a block at very confusing paper. Definitely not spike type paper like we saw before. I would almost say that there's almost 2 people trying to do different things here with these strikes. Really, really confusing paper now. I'm seeing 80,000 going up, so not quite sure what the heck's going on. But The stock was trading $9, and now it's quickly going back down again. So maybe there's some sort of adverse ruling or decision or something like that.
Yeah, it's kind of an explosion of put paper here, a put palooza, if you will. We've got the Nove 9 puts doing nearly 37,000 contracts today. The March 9 puts going up for about 40,000 contracts. And the March 10 puts, which we, of course, profiled, going up. That block was for 18, a total of about 40,000 out there as well. So it could be a bit of a roll down there. It looks like some going mid to offer. That's a weird roll if that's the case. These are actually, no, these were opening on the 10, so they're not rolling there. They're opening on the 10, so all sorts of weirdness. I guess you know what that means, Mr. Rock Lobster. Oh, this category is overflowing these. We have to do a whole hour-long review show just to catch up with all these to be watched, because we're going back to Teva again, too. Now let's bring it home here, listeners, with the size print of the day. Of course, if you look at some of those strikes out there, maybe not. Teva could be leading the dance, too. But overall, what caught our eye, at least in terms of size blocks, is a name we don't talk about a lot on the odd blocks, Sprint. Sprint Corp, ticker symbol S. Trading today a whopping $6.16. Kind of unched on the day, up a little bit. Not getting the love everything else is getting in the marketplace today. Let's see. This is the name that a year ago was trading not that far from where it is right now. It was trading $6.38 a year ago. Today at $6.16. Dipped down to its low of about 5.5 right around Christmas Eve, it seems like. And then it hit it again back in May. And then after May, it kind of just rallied right back up to 7.25, and it got to the high of the year right around $8 in mid-July, mid to late July. Hit about $8, and then it immediately turned right back down again. Was trading 6 2/3 a week or so later. So it's been an interesting year for Sprint. I know there's a lot of corporate actions and things going on, regulatory actions going on in the cellular space out there. So that's obviously driving a lot of this. What's going on in the stock. Let's see what we saw today, listeners. Let's see. It was a massive block. Nearly 35,000, 34,800. So this gets our size UA print of the day at the very least. 34,800 of the D7 calls, so near out-of-the-money calls, going up for 18 cents. These things were 13 cents at 18. This guy says, I'm not playing around. I'm doing nearly 40,000 of those bad boys. That's how many went up total today. I want all of them. Give them to me for 18 cents. And he got them. He got 35,000 of them for 18 cents at least. I don't know where the latter kind went up. The other about 5,000 or so, but probably around that level. So these quotes are good for some size out here, which is always nice to see in a name that doesn't trade a lot like Sprint. The ADV is only 20,000 out there. So we saw 2x that going up in this one trade alone pretty much. So that's a lot of paper, and that's a lot to hold up for that offer for, and they took it. There are earnings, but not anytime soon. They are in January 30th. So it seems like we just came off a cycle here with Sprint. So Mr. Rock Lobster, looks like a little bit of, oh, this is another one. It looks like on the floor. It might be box. I can't tell if that's box there, but it's, this is Arca. Looks like Arca. So Arca, or Amex really, that would be the floor on the Amex there. But either way, this is another floor print. So Mr. Rock Lobster, a little bit of flipping of the script. Size call of. Pretty impressive size here in Sprint. What's your spidey sense telling you on these, sir?
Are they getting taken over? They have been taken over, or it's hard for me to like Sprint and T-Mobile. It's all confusing.
Yeah, the whims of the corporate M&A in the cellular space is kind of hard to follow. You're right.
It is. I mean, somebody's buying 34,000 December 7 calls in a telecom company. Now there was the announcement to 48,000. So okay. Why would you buy the D7 calls for 15 cents? Because you think they're going to be worth $1. So I can only assume that the stock is going much higher. And I cannot keep up with the M&A action and these like Sprint, T-Mobile, I don't know who else, U.S. Cellular. It's like it's all just kind of, it makes my addled brain. That's almost too much to think about. That's why it's easier for me to concentrate on just Walt products. But to me, it just all I know is they paid 18 cents on 34,000, and now they're trading 16. So
well done.
I look at that.
Well done, sir.
It's an instant smack in the head. You know, so.
Looks like they just got approved for their merger with T-Mobile. Obviously, a little bit of merger arb going on here. So far, not looking too good.
At least for right now.
At least for right now. You know what? I guess we'll go 3 for 3, Mr. Rocklopsticks. We don't have enough to research. We'll come back to these as well. We'll see how this plays out. So many names to watch, listeners. So much unusual activity. But now it's your turn. Your turn to tell us what the heck's on your brain with a little bit of the old Thursday mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, let's get into it, see how many we can squeeze onto the show today. Remember last show, Mr. Rocklops, you and I were breaking down why VIX cash was up and the markets were up, a seemingly aberrant development. Don't just happen more than you might think, listeners. And this guy, Suleiman Lalani, easy for me to say, was listening. And he said, it's not the first time. VIX longs are insurance on stock holdings. Yeah, to a degree. I always cringe when I hear that usage of VIX as an insurance. Anything hedge or insurance and VIX in the same sentence always makes me a little uneasy because it's not quite the use case, but interesting one nonetheless. So yes, he obviously was listening and chiming in here. Let's see what else we got. I like this handle. Delete this account 1. Okay then. Hopefully they don't take you seriously because then we won't get your questions. He or she asking, I have a quick question for you. If your option contract becomes in the money and worth something, can you sell it on the Friday of expiration? The example is a paper trade I did with Sirius XM and had bought 6.5 calls, so the 6.5 call strike, obviously, listeners, for 7 cents 10 times, and on earnings it was worth 23 cents. And he says earnings was on a Thursday. Because on paper I sold, but it went up another 10 cents on Friday. Would I have been able to sell that as long as there was a bid? Well, it seems like he's got 2 questions here, really. He wants to know, A, if he's long it, can he sell that? And then B, it sounds like also if he sold it on Thursday and then it went up another 10 cents, could he sell it again? Is that what he's asking? Maybe. I don't know. Mr. Song of Ice and Fire, this sounds like an active trader strategy question if ever I heard one, sir. What do you have to say here for Mr. or Mrs. Delete This Account? He paper traded, bought some calls in Sirius XM right before expiration, ahead of earnings. Earnings went his way. The calls were up. Can he sell those, he wants to know. And then B, he said, something else about if they went up another 10 cents on Friday. I'm not sure what he means there. I guess maybe, can he sell them again is the second question, sir.
Well, that's an interesting way to phrase the question. So, yeah, I mean, if you're long the contracts, you could sell them at any point in time to close them and get whatever profit you can out of them. Or paper sell them, whatever you want to call it in this situation. Yeah, you can do that. I guess I'll answer it from both perspectives. Maybe if he's asking, I'm going to take it from this angle, if he's asking if I didn't sell it on that earnings day and went into that last day of trading on Friday, as long as your expiration date goes through that full week, which more likely will, with these contracts, with equity ones, they do have the weeklies that end on Friday. You can trade them all day Friday. If you held them and didn't sell them on Thursday, and you held it through Friday and it went up that additional amount, could you sell them? Yes. If it's that last day of trading, you can sell them. If you're asking, I've already sold them and I want to sell them again, well, yeah, I mean, as long as you have the appropriate approval for trading, that's option level. In other words, what's known as naked options, not owning the underlying, but just outright selling the options. You could sell those calls and hope to buy them back cheaper if you're bearish and you can stomach unlimited loss. Yeah, you can sell them again and hope that it becomes cheaper. But if you're saying, can I just sell them again over and over again, even though I don't go long again? Probably not. Not if you're trying to take advantage of a bullish outlook. So try to answer it from both sides. Hopefully one of them hit the mark. But those would be my answers on that.
Funny you should mention selling things again and again and again, Mr. Song of Ice and Fire, because this one came in from a lot of people. A lot of people were talking about this. This was the hot I think Bloomberg had an article about this as well, which is why people got people talking about it. This particular one comes in from Natch. Natch wants to know, you guys see the infinite money covered call, quote-unquote, glitch on Robinhood? And this comes from the article that Bloomberg wrote. And yeah, we did see it. A lot of people hit us up with this, as you might imagine. Here, Natch. This kind of just goes to show how hard it is to do these options things right. And this comes here from the Bloomberg article that effectively, and listeners, you listen to the show, you know what a covered call is. Sounds like people on Robinhood were buying stocks and then selling deep in the money covered calls against them. And the platform was crediting all of that money back to them and allowing it to be free and completely untied capital on the margin side so they could turn around and buy more stock and do the whole thing again, and giving them margin so they could buy 2x the stock and then write covered calls against that and then buy 2x that stock. And you can see how this goes exponentially more and more and more. And so we did see that, and that is dangerous. I will go out on a limb and say this is not a thing that's been limited to Robinhood. I have talked to other brokers in the past who are, let's say, not as sophisticated on the options front, and they're kind of dipping their toes into the options waters. And this exact problem has popped up on other platforms in the past. In fact, I was talking to someone very recently. He told me he discovered this just internally on their own platform. And he was playing around with something. He said, wait a minute. This is giving me all this money back. I could do it all again. He actually had to go internally and tell people, hey, we need to fix this. And they did. So this is not a unique thing. This just goes to show kind of how hard it is to get these options things right. I guess, Mr. Song of Ice and Fire, this should put a smile on your face, not from any sort of schadenfreude for another broker, but it kind of just goes to show how hard it is to do these things right. Would you concur, sir?
Yeah, it really does, and how tricky not only the aspect of option trading and the risks involved with it, but also the margin aspect as well. All of those different technologies working together. I know we were kidding before about that, but technology is a great thing, but it also can be a scary thing as well, because things like this can certainly make a very uncomfortable situation. So it's unfortunate something like that comes up.
Mr. Rock Lobster, any of your crazies taking advantage of this glitch while the getting was good, sir?
Well, I just remember, so many, many moons ago when I worked for Groupon, we had a company called Mr. Stock that Mr. Stock execute early on 1995 e-brokerage, like an early internet brokerage, and we had the same issue. Funny enough, so even though a firm that was pretty good with risk management and all that kind of stuff could screw this up, but it doesn't surprise me that when the guys that started Robinhood and all these other guys that are doing all these little these app, the phone app brokerage, they don't know a lot about options. And what I've learned is that not many people really know a lot about options. Even these guys that are trying to start these firms, they're starting them for another reason, but then they start to go off into, the actual margin and some of the, intricacies of how all this stuff works. And they really don't get it. So it doesn't surprise me. But that's why you go with firms like Fidelity. They've been around for a while. They know how to do this kind of stuff. But anyway, that's I have seen this. It is not a total surprise, and I'm quite sure we will see it again, especially on products that they don't know how to margin. They just let people start trading them. Because even like VIX or SPX the Fidelity desk guys, I'm sure, can tell a lot of horror stories about people that understand how the products work. And I guarantee you, there's no way that a lot of these I'll just call them, app brokerages or whatever. They don't have any idea how these contracts trade, really, and they're going to get some surprises. So we'll see.
Yeah, it sounds like Robinhood's had a few unpleasant surprises on the options front now, boxes, and now this. It is funny. I was just talking to someone about this exact thing a couple of weeks ago, in completely non-apropos of a Robinhood or anything else. He just happened to bring it up to me. That was a reminder that just how prevalent this still is in the space. And you're right. You've seen it too, Mr. Rock Lobster. So it is floating around. Robinhood, unfortunately, following in the well-trodden footsteps of many other brokers who have encountered this issue over the years. Meanwhile, we have to keep on trotting in our own footsteps into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the program where we tell you what we're watching for the rest of this week into the weekend. Let's start in the land of St. Charles. Mr. Uncle Mike, sir, a lot of craziness going on, infinite covered calls, all-time highs in the market. What is on your radar for the rest of the week, sir?
I want to see if we have a continuation of this. I think that the metals will be an indicator in terms of if there's going to be some type of paranoia and something frantic perhaps happening with what's happening with the trade deal. But overall, things look like they're going to happen. But I want to see if this is going to be a sell the news type of an event or, hey, this is better than we thought, let's buy more type of an event. So definitely watching that. Once again, I think we're pretty securely above the 3,000 mark. So if we do venture back towards it, I think it would be a good level of support. But that's just my opinion.
And were you selling any infinite money covered calls this week, sir?
No infinite money covered calls, no.
Not part of the Uncle Mike risk profile, I don't think. All right. And Mr. Song of Ice and Fire, same question for you, sir. What are you watching the rest of this week?
So it's I hate to say this because this does sound like just a repeat of a repeat, but I'm still eyeing that trade deal. What's going on? I'm waiting for confirmation until there's actually someone signing something is what I'm going to be watching for. I am going to be watching the S&P pretty closely, especially with us hitting all-time highs. It's going to see if it can continue fall through or if we're going to maybe retreat from here. And you mentioned it earlier. I'm also going to be watching the price action of silver and gold. It seems to be fairly interesting at the levels that it's at right now. And lastly, with Uber coming off of that post lockup for the shares, I want to see what happens from here. Right? What happens with the price action from there? So those are some of the things that are catching my eye so far.
Thank you for that. And last but not least, Mr. Rock Lobster, when you're not blasting away on infinite money covered calls, sir, what is on your radar for the rest of the week?
Two things. I got trade deals, since we got to say that, and then how high can this VIX premium last as we roll into December? The NOV 29 cycle in VXX has tremendous potential to move up or down. But if the futures come in, down could be a huge move right after the November 20 expiration for the VIX cash, because like all the vol products will be December by then. So you could see a pretty healthy swing there, especially on the downside. So watching that to see if that goes. And I mean, it feels like, hey, we have a trade deal and we're at all-time highs, so that should make everybody happy. So I guess it's how much higher we really can go when the earnings are out and everything else. So that's where we are.
That, unfortunately, is where we are. That music means, unfortunately, we have come to the end of an epic 1-hour journey through the world of options. Let's go quick around the horn, see what everyone else has cooking that may interest you. Let's start where we just were. Mr. Rock Lobster, sir. If folks are intrigued, maybe they want to learn more. Maybe they want to learn about these infinite money covered calls. Where should they go? What should they do?
Well, I guess you need to go to Robinhood to learn for those. But if you want to learn how understand options, Mark is doing a webinar tonight, 9:30 Eastern time, and I'm doing one next week on how to use volatility to trade the vol products, and it will be free, and it's on Thursday at 7:30 next week. If you don't go and check it out and you lose money trading vol products, it's your own damn fault.
There you go. That's the new tagline. It's your own damn fault. Option Pit. It is your own damn fault. I like it. There we go. OptionPit.com. See whose fault it is for yourself. And Mr. Uncle Mike, same question for you, sir. If folks are intrigued, maybe they want to learn why they shouldn't be doing these infinite covered calls. Where should they go? What should they do, sir?
By all means, contact me. Don't do any infinite money covered calls, but definitely do a lot in the options space as a financial advisor, and there's not a lot of us out there. And with that, even if it is your fault, we're pretty nice to you about over here at St. Charles Wealth Management. So check out my site, stcharleswealth.com, and contact me.
All right, and last but not least, Mr. Song of Ice and Fire, sir. If folks want to learn more, maybe they want to kick the tires over there at Fidelity, where should they go? What should they do?
Yeah, so if they www.fidelity.com/options. Take a look at some of the analytical tools to help you analyze your trades, make sure they are indeed what you're looking to do, as well as you could always give us a call if you have any kind of option strategy idea that you want to run by us, you want to make sure it is indeed what you're trying to accomplish. Give us a call at 877-907-4429. You could even ask to speak with a trading strategy desk, or even ask to speak with me. We're here to help you out in any way that we can. We also have our online classes, so certainly you could join us there as well if you don't want to call in. So either way, we're here to help you out.
All right, check them out, fidelity.com/options. And on behalf of the Rock Lobster and Uncle Mike and the Song of Ice and Fire, and indeed myself, I thank all of you out there for downloading, streaming, subscribing, for sending in so many great questions. Keep them coming. If you want a little more in your life, maybe you want to talk a little energy, maybe you want to talk some more equities, we got that on the docket for you as well, maybe some other commodities. Join us in exactly 27 minutes for TWIFO. Otherwise, we'll see you back here tomorrow for Volatility Views, and we kick it all off again on Monday for more of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.